Hello friends, James Stevenson with a commissioned hot take reaction video by popular demand. People have been asking that I make a reaction video to something Chicken Genius Singapore posted on October 4th, so 5 days ago, right at the beginning of the last very tumultuous week for Tesla, in which Tesla stock was down about 15%. So this is that video for those who requested it. I'm going to go ahead and bring up the video in question. I'll just play it and pause it and react to it, and you can get my take on it.
I like Tesla as a company. I am a fan. The Model 3 Performance is the best car I ever owned, period.
Wow, that's awesome. Thanks, Ken. Great video.
But Tesla is the stock. Now? You must be kidding me. I'm presenting to you facts. I know there will be reaction videos made. Toxic fanboys coming after me. What's new? But I couldn't care less. I don't depend on YouTube. I have a great life outside of YouTube. I have value.
I'm really happy to hear about that, Ken. So just before anybody accuses me of being a toxic Tesla fanboy, I did queue up a few videos here where here's French Bulldogs, Exotic Frenchies 3 days ago, Chicken Genius trashing Tesla as well. Can you do a reaction video? What else do we have here? Michelle Cote, have a look at Chicken Genius' latest video. Then I posted James's Gems of the Week here. Lulu requested, "Hey James, have you seen Chicken Genius's recent bearish video on Tesla? Would be interested to hear your thoughts." So I'm not picking on you, Ken. People, I wasn't going to make this video, but the people get what the people want.
Truth more. For transparency, a quick history. I bought it way back here and I sold some at 1,002. This was before the split. I bought back too early and started to hedge here. I missed out the spike. I also missed the downside. I started to short the stock at this resistance level by selling stock, converting my hedge to a short, and recently closed out for a nice profit. Looking back, my consistent track record of being too early is goddamn annoying.
All right, so what do we know about Ken based on what he just told us? We know that he made a great move investing in Tesla back in 2018. And since then, he's pretty proud of some selling and some buying and some shorting activity that he's done since. So do we classify Ken as a Tesla investor, or do we classify Ken as a Tesla trader? I think based on his own description of his activities, a guy like Ron Barron would call Ken a trader, saying that what he's trying to do, his investing strategy, or his trading strategy, is to buy low and sell high. He wants to sell when he thinks the stock is overvalued and buy when he thinks the stock is undervalued. And that isn't the way Ron Barron invests. He finds companies that he thinks are undervalued and he invests in them. And then that's it. He just leaves the money invested for many, many years. And then if he's right that that company was undervalued over a long period of time, the market will figure that out. So in the short term, the stock market is a voting machine. But over the long term, the stock market is a weighing machine. Earnings matter to investors over long enough periods of time. But over short periods of time, the stock price is unpredictable. And no matter how confident or how much of a genius anybody thinks they are, nobody knows what short-term stock price movement is going to be in a stock. As it turns out, Ken had a pretty good week here with Tesla being down 15%. Let's keep playing the video.
But the profit is a profit. Guess that's all that matters. Let me ask you this serious question. This is one of the worst economic conditions ever. Do you really expect the first thing people will buy is a car? It's not just a car, a premium car. You must be out of your mind. Wake up. Auto sales are one of the first sectors to get hit.
All right, so I'll pause it here before he takes this chart down. So this chart isn't showing Tesla's sales. This chart is showing total vehicle sales. So he's saying that during recessions, which are gray on the chart, total vehicle sales drop. Okay, fine. What I have for you over here is what's happened on a chart that I tweeted a few days ago. 2015 is the blue bars, 2022 annualized is the red bars. What I mean by annualized is I just took the numbers reported by Automotive News for the year-to-date Q3 2022 and I annualized those. I just carried the trend forward and said, hey, if Q4 ends up being the same as the average quarter has been so far this year, what will 2022 look like in total? Just so I could compare it against this 2015 full year data that I had. So what you can see here is that almost without exception, every automaker's sales are significantly lower now than they were 7 years ago. Where are the exceptions? Hyundai Kia is up a little. So maybe they've managed to gain almost 100,000. Just eyeballing that, probably a little less than 100,000 worth of gain there. Volkswagen looks like they are just fractionally higher than where they were in 2015. Everybody else on this chart is down except for Volvo, which moved from a very small number indeed to a little bit higher number. And then we have Tesla. In 2015, Tesla was selling about 20,000 vehicles, and now they are selling more than 400,000 vehicles in the US. US light vehicle sales is this chart. Of course, Tesla's totals are a lot higher than this, well over 1 million this year, if you look at the global numbers. But this is more than Volvo, Mitsubishi, Mazda, or BMW, closing in on Volkswagen. We'll pass Volkswagen and Subaru next year, possibly also Nissan, right? Look at the trend. The trend is your friend. Let me get rid of that chart and show you a different one. This is just the US light vehicle sales for the year-to-date Q3 2022. You may notice that Tesla is up 47%, and without exception, every single competitor is down. They're all down. Between 1% for Ford and 38% for Honda. US light vehicle sales. So what we may see during this recession is that, to go back to Ken's video, there is a decline in the number of total vehicles sold, but Tesla is going to sell every vehicle they make as they continue to ramp up production worldwide. Tesla's going to sell all their vehicles, and they're going to do it at world-class profit margins. Industry-leading profitability is what Tesla has been delivering lately and will continue to deliver in the future. All right, let me keep playing Ken's video.
I present to you some facts. You make your own judgment. Long term, 5 to 10 years, FSD, robots, no problem. Short term, the fundamentals have changed.
All right, so if you're going to tell me the fundamentals have changed, what you need to tell me is new information the market did not already know. Tesla stock has been beaten up quite a lot this year, so what I expect to hear from Ken is new information.
Tesla's backlog is shrinking.
All right, so the visual that Ken is showing here comes from Troy Teslaike's count of Tesla's order backlog. Most automakers have no backlog at all, but Tesla had a really big one, which was kind of a really big problem in March of 2022. The strategy Tesla took to address this literally growing problem to prevent it from getting too bad was to increase prices so that this 500,000 vehicles didn't become 1 million vehicles, 1.5 million vehicles, 2 million vehicles with delivery estimate times stretching beyond a year. That's not good for your business, right? To tell anybody who wants one of your cars that they can't have one for a year. So the way to throttle that backlog back down to a more manageable level, something more consistent with Tesla's Goldilocks zone, where they want the order backlog to be, was to raise prices, and Tesla has been doing that over the past year. Those price increases flow through to the bottom line as just extra profit, right? And if this backlog declines to an amount below where Tesla wants their Goldilocks zone to be defined, they can reduce prices strategically in the markets where it makes sense to do that.
Back orders are being exhausted. What about new order flow? If you got connections up at Tesla, ask them. Tesla is losing.
All right, so this chart is only up here for a little bit, but the important thing to glean from this title is that we're looking only at battery electric vehicles here. Battery electric vehicles. That is not the total market. That is a teeny tiny subset of the market. So the percentage of the battery electric vehicle market that Tesla owns is not important to an investor. It's trivia. It's not where an investor would be looking. An investor would be looking at the total market. All vehicles, including internal combustion engine vehicles. Why? Because Tesla is taking share from sales of combustion engine vehicles, right? And every time Tesla's competitors enter the electric vehicle market, they are cannibalizing their combustion engine vehicle sales. That's why we saw in this chart earlier, Tesla is up and everybody else is down. If I scroll back to the other chart, these automakers are losing total sales, and they have been for many, many years, right? I don't have any of the years in between 2015 through 2022 charted here, but it's been a pretty steady downward march for these automakers, and that's going to continue as they split their focus between producing electric vehicles and producing internal combustion engine vehicles, trying not to cannibalize too much of their own sales and end up spreading their resources over a lot of effort, right? Tesla does not have this problem because Tesla has never made a combustion engine vehicle.
Losing market share. I know the argument bulls make, the TAM is huge.
Yes, the TAM is huge. That's the argument because that's what matters to an investor. There is a huge total addressable market out there for Tesla. Tesla is still selling only 2 or 3% of the globe's market share and scaling up production globally as fast as they possibly can to try to address more of that market and make Teslas available with a shorter wait time than we have currently. That's progress.
However, in such market condition, price matters. If someone is buying an electric SUV, this is a BYD Auto 3 with the...
All right, so that BYD Auto 3 is only available in China. China's an important market. It's the largest market on Earth, and Tesla is doing just fine in that market. Tesla wants competitors to address the value-conscious buyer with electric vehicle options, right? The mission of Tesla is to accelerate the world's transition to sustainable energy. That's not a secret. It's right in the company letterhead, folks. It's important to Tesla that everybody else makes electric vehicles, so they applaud BYD making a lower-cost car available to buyers in China. But plenty of people are still buying the Tesla Model Y because they prefer it when they comparison shop, right? People who can afford to buy the best are comparing these two vehicles and saying, well, the Tesla's better on safety, it's better on technology, it's better on features, it's better on efficiency. I don't know if this one's a plug-in hybrid electric vehicle or not.
Battery at almost half the price of a standard Model Y. It makes people think twice, and everything I show, there are links below. Total demand destruction. China has a 1-week wait time.
All right, so here's a tweet from September 22nd from Troy Teslaik. You may notice that was the last week, the beginning of the last week of Tesla's fiscal Q3, right? It's common for people placing orders close to a production site to see a 1-week delivery time when there's 1 week remaining in the quarter and they live near a production location for Tesla, right? So that number at the beginning of October jumped right back up to 1 to 4 weeks for some order configs, 4 to 8 weeks for other order configs, because at the beginning of the quarter, Tesla switches over to producing for regions that require production going on to a ship to be transported to some other continent, Europe or the rest of the world.
You order a Tesla, you get it in 1 week. Where are the new orders coming from? From Europe, China?
Yeah, and from the US. All those other places have longer order wait times. Australia is still up at 6 or 9 months delivery time. The backlog is still long other places. China also had this problem with a rumor that went around that the Model Y SR price would be coming down by quite a lot to take advantage of a new government incentive in China that requires the price of the vehicle to be no higher than $42,000 US. So the rumor was that Tesla is going to lower the base price of the cheapest Model Y so that it would qualify for that government incentive. So a lot of people deferred delivery of a Model Y SR they had ordered and was available in September. That's just a timing difference. That delivery will still occur. It'll occur in Q4, either before or after that price change happens, if it happens.
China's economy is in shit and Europe is shittier on advertising from a company that says they will not advertise.
All right, so I've been expecting to hear new information here, and I don't think it's new information to very many people that the global economy is, in a bear market this year.
Supply constraint, can't make enough cars to supply the market.
Well, hold on, which one is it? Is it a demand problem or is it a supply problem? Maybe it's both. Maybe Ken's trying to tell us that Tesla has supply and demand problems.
But now they're hiring marketers and cold calling. Why? You think they got nothing better to do? Please just exercise some sort of common sense. Step out of the echo chamber just for a moment.
All right, so that last point was about marketing. A lot of people confuse marketing with advertising. Advertising is one of the disciplines within the umbrella of marketing. All corporations have marketing departments, including Tesla. What Tesla doesn't do that separates them from other automakers is Tesla doesn't spend billions of dollars per year buying media buying. Right, Tesla's not making commercials and running them on TV or during the Super Bowl. In fact, on an earnings release after the Super Bowl happened, Tesla showed how much Tesla's orders went up as a result of all the rival automakers advertising their upcoming EVs during the Super Bowl. What happens then? People start to get interested, thinking about, am I going to buy an EV for my next vehicle? What should I compare it against? The first company that comes to mind to compare against is Tesla. So you get it online, you do your research, you compare features, you compare specs, you see what separates these products, what makes them different, and then you make a buying decision. And a lot of them decided to order a Tesla because they judge the Tesla product to be superior. People who can afford to buy the best vehicle available do. And that's what's been preventing the demand cliff from arriving. Every year, Tesla Q says the demand cliff is almost here. Next quarter, people are going to stop buying the best vehicles available. And so far, they've been wrong.
The layoffs really pisses me off. I really feel bad for the employees. They work so hard. And till now, there's still nobody that can explain to me $18 billion cash, a high free cash flow at a company that grows 50% a year. 50%! Somebody just explain to me.
All right, so I don't even understand what the question is that Ken is asking to answer it. Let me bring up the table that he just showed you. This is just Tesla's Q2 earnings release. So in this section, we see the two items that make up free cash flow. Where does free cash flow come from? It's the net cash provided by operations. So this is the business that your company is producing this much cash. And then how much of that did you have to spend on capital projects, capital expenditures, buying assets that have a long life, constructing factories, that sort of thing. So the difference between these two numbers is the free cash flow, how much money is left over after you pay for all those capital expenditures out of the net cash provided by your operating activities. And that free cash flow number has been a positive number for Tesla for the previous 5 quarters, including the previous Q2 here. 0% growth year over year. This would have been a much bigger number, except that Q2 was adversely impacted by lockdowns in Shanghai that closed that factory, Tesla's most productive factory in terms of profit contribution per vehicle sold. Closed for 4 weeks and then operating under limitations for another 4 weeks where they could only run one shift per day, 6 days per week, right? So that resulted in a lot less vehicles getting delivered in Q2, and you can see all the metrics that were down sequentially, including automotive gross margin. Less of the vehicles produced at Tesla's lowest cost per vehicle factory got delivered during that quarter. Total GAAP gross margin lower. That's why the free cash flow was lower. Tesla's cash balance is unrelated to free cash flows. This is a balance sheet item. This is an asset that was increasing, not as a result of these, the net cash from operating activities and the CapEx, but because of other stuff that changes cash balance. One of those was Tesla sold 75% of their Bitcoin during the quarter. So that's here. It moved out of the digital assets sub account of assets into the cash and cash equivalents account, right? But another thing Tesla's been doing is paying down debt. So here's part of the explanation for the cash. Maybe this is what Kim was looking for. It was in the release. Free cash flow increased by $621 million, partially offset by debt repayments of $402 million. What's this say? It says the free cash flow would have been more than $1 billion, except that Tesla has continued aggressively paying down debt. Tesla has almost no recourse debt remaining on their balance sheet, resulting in a fortress balance sheet, one of the strongest companies financially in the world, not just among automakers. Tesla's Altman Z-score is over 20. That is orders of magnitude better than most of Tesla's competition that have an Altman Z-score down around 1 or 2. They're in danger of financial distress, and Tesla is not. Almost no recourse debt remaining for Tesla. All right, back to the video.
Let me tell you something. Management knows something we don't. Gigabyte.
All right, well, what management may know that we don't is that it's a good idea to have a lot of cash on hand, right? Maybe when interest rates go up, it's a good idea to not need to borrow any money, to not need to raise cash, to not need to issue stock. Maybe Tesla feels like their stock is undervalued at this point. I feel that Tesla stock is undervalued at this point relative to the earnings growth that I expect to happen in the future. 100% or better earnings growth this year, next year, the year after that. What kind of PE multiple is that worth? A lot more than what Tesla is currently trading at, in my judgment.
Berlin. Good luck. Think about it this way. The cost of energy directly affects the cost of manufacturing.
Yeah, that's true. One of the costs of running a factory is the electricity bill. It's not one of the biggest costs. Your biggest costs are buying parts, buying raw materials, paying for the labor for the people who work at the factory to transform those into finished products. Yeah, electricity is a cost. When everybody's costs go up, and there are plenty of Tesla competitors in Germany paying the same electric bill rates, it's good to have world-class profitability, industry-leading profit margins, which Tesla has. They can afford to give up a little bit and still be growing earnings year over year.
You literally become uncompetitive. Energy is life. I may even do a video on this. Depends on my mood. Latest Tesla news. The last quarter deliveries were below estimates. I think that Q4 deliveries will be much higher. But remember, the markets are forward-looking, pricing in future expectations.
Yeah, I agree with all that. And I made a video about why the Q3 deliveries were lower than analysts expected. It's because Tesla is ending the wave, finally. and carrying more ending inventory. So this is just another timing flip. Some of the deliveries that people thought would happen in Q3 are now going to happen in Q4. And then going forward, Tesla will have lower costs per vehicle, which you can read about in their note, or you can watch that video that I made as well to understand those. And yes, the market is forward-looking, which is why it's very dangerous to speculate on the stock price continuing to drop based on things that have happened in the past. Things that have happened in the past ought to have already been priced into the stock.
Well, will I buy Tesla stock again? Yeah. Again, I love the company, but not the stock price. The target is still the same at 420 pre-split, which means about 140 levels.
All right, so Ken has said he intends to buy Tesla stock again when it drops to $140. There is only one flaw in this plan, and perhaps you have guessed what that flaw is. It's that it is far from certain that Tesla will ever trade at $140 again. It is not certain that that's going to happen. So it's a dangerous strategy to try to sell your stock today in the hopes of buying it back later for 30% less. The sale you're imagining may happen, may not happen.
I mentioned this months back doing an interview with Tom Nash and Mandarin podcast. For now, I'm mostly in cash. I left my smaller positions open. I don't give a shit. Remember, while it feels good to be in an echo chamber, my advice is to have some situation awareness. Don't be cocky. Markets will humble you. Invest safe. I like Tesla.
And he ends his video with invest safe. I couldn't even pause the video fast enough after he said it. Don't be cocky. The markets will humble you. Those are possibly strangely prophetic words to say at the end of a video where you just said you're going to wait until the stock drops to $140 to buy it back again. I mean, maybe that's going to happen, and maybe it won't. The stock price was down some over the remainder of the week when Ken published this video, but that downtrend is not guaranteed to occur or to continue. So yeah, the markets can remain irrational longer than you can remain solvent. It's not a good idea to play with lots of options and margin. Lots of folks get wiped out believing that they know how to call tops and bottoms, but top pickers and bottom pickers become cotton pickers. I will close with the cautionary tale of Greg Wester. What I fear I see that Ken has done with this video is state his intention to repeat the mistake that Greg Wester made in 2019. If you don't know who he is, at GWestR on Twitter. Many of you are thinking, hey, James, that's a Tesla hater. Why are you bringing that person up? And that's because you weren't following him more than 3 years ago. So Greg Wester was one of the biggest Tesla bulls and investors on Twitter, every day putting out bullish expectations and optimism for how great an investment it was to be invested in Tesla. And what he was doing, he described in a tweet at the time as a wash, rinse, repeat strategy of selling Tesla when the price was, in his judgment, high. So at the time, before both splits, more than 300. And then buying the stock back when it was low, in his estimation, down around 200. And that strategy worked for him a few times, right? He was able to sell closer to 300 and then buy back closer to 200. And then in 2019, he did it again, thinking the stock price would fall back to 200-ish again, and he'd be able to get his shares back. And the stock price went up and up and up as Tesla was re-rated into more than a $100 billion company. And then it went past 200 billion and 300 billion and 400 billion and 500 billion. And Tesla trades today for around $700 billion, or as it will be known in future years, 0.7 trillion, because Tesla is going to be valued in the trillions in the future, is my expectation. Don't repeat the curse of Greg Wester, who is now doomed to troll Twitter, making up lies and falsehoods about Tesla, trying to drive the stock price down to whatever level he imagines is fair value. And that's where I'll close my video. Don't be Greg Wester. Never go full Greg. And with that, if you've enjoyed today's video, click the like button. If you're not subscribed to my channel, you could go ahead and subscribe to my channel. And if you like what I'm doing, want to support my efforts, you can check out the links in the video description. Follow me on Twitter at @ICannot_enough, and I will see you in the next one.